Level 1, $10,000. You saved it over 2 years, skipped the dinners, drove the old car, watched the number climb one paycheck at a time. $10,000. You did the exact thing they tell you to do. So you call the firm from the commercial, the one with the family on the beach and the words, "We're here for you," under the logo. A voice answers, polite, trained. It asks how much you have to invest. You say 10,000. There's a pause on the line. Short, but you hear it. Then the voice explains, gently, that they have a minimum, 25,000, sometimes 50. Below that, they can point you to the website. You hang up holding $10,000 and a link. The link is an app. It asks how you'd feel if your money dropped 20%. You tap the middle button. The next screen doesn't ask anything else about you, not your job, not your family, not the reason you saved it. 4 seconds later, a wheel of colors appears on the screen and a machine starts running your money for 0.25%. No handshake, no name. Nobody asked about your kids. You check it that night. Then the next morning. Then you stop checking, because nothing is happening and nothing is supposed to. The machine buys the boring funds. It never panics. It never calls to sell you anything. An email arrives a week later. Dear valued investor, not your name. A template with your money inside it. You try the help chat once and a bot answers in under a second and solves nothing in 10 minutes. The thing they handed you because you weren't worth a person is the best deal you'll be offered for the next decade. You just don't know that yet. At $10,000, nobody is cruel to you. Cruelty would take attention. You haven't earned any. Level 2. $50,000. You cross the minimum. The phone starts ringing the other direction. It starts with a free dinner, a steakhouse, a slideshow, a man at the front talking about the retirement most people never see coming. You go for the food. You leave with a business card and a follow-up already on his calendar. Now someone wants to meet you. A real office, a firm handshake, a bottle of water with the label facing you. He asks about your family, your job, your dreams for retirement. He writes your daughter's name on a legal pad like it matters. He is warm. He is easy. And at the end, he tells you the good news. His advice is free. You should feel something small go cold when a man says his advice is free. You don't. Not yet. He slides a brochure across the desk. An annuity. A fund with a 5% charge baked into the front where you can't see it. It's a good product, he says. Suitable. He doesn't say best. You don't catch that he didn't. You ask what happens if you need the money early. He turns the page quickly and tells you about the growth instead. The words surrender charge are in the fine print. 7 years locked. He doesn't read that part out loud. You almost sign. The pen is already in your hand. Something stops you and you tell him you'll think about it. His smile stays, but the warmth behind it clocks out early. The follow-up calls that came twice a week stop the moment you say the word, wait. There's one question that ends the whole meeting. You ask how he gets paid. He smiles wider and starts a sentence with the word, well. The man across the desk isn't your advisor. He's a salesman who found out your balance. Level 3. $250,000. Now you're worth a fee. The salesman hands you up to someone quieter. No brochure, no pitch. Just 1% a year to manage it all, and a calm voice on a quarterly call telling you you're on track. The call lasts 12 minutes. Most of it is reassurance. He uses your first name 3 times and the phrase, for someone in your position twice, and you hang up feeling steadier without a single thing having changed. It feels like nothing. $2,500, pulled before you ever see it, out of a number you don't check. It never feels like losing anything. That's the design. The statement buries it on page 4, one line among 40 phrased, so your eye slides right past. A small fee slips onto your statement 1 month. $30. You email to ask. It's reversed by lunch with a note that says, taken care of. You feel looked after. You are being managed. 1 quarter you notice the market did 9% and your account did 7.5%. You ask about the gap. He talks about risk and smoothing and staying the course. He never says the word fee. The gap was the fee. It is always, quietly, the fee. Run it 35 years. That 1% stops being 1%. It becomes a quarter of everything this money would ever have earned you. Gone a little at a time, into a total you never had to approve. The fee doesn't cost you 1%. It costs you a quarter of the retirement you're paying them to protect. Level 4. $500,000. At $500,000, You become someone worth keeping. The quarterly call becomes a binder with your name on the cover, retirement charts, a tax note in the margin. He remembers your daughter without the legal pad now. He emails on your birthday and the email is written, not automated. The service is real, and it should be. Losing you costs the firm money. You get assigned a relationship manager, a second name to know. At the holidays, a small gift arrives, a bottle of something decent, handwritten card. You feel the difference in your chest before you can explain it. An invitation arrives, a client-only dinner, a speaker, a view of the city, a table where nobody mentions money once all night. You leave feeling chosen. The binder is thick and it looks like it was built for you. Open it slowly and you'll find the same projections, the same pie charts, the same font as every other client at your tier. Impressive is not the same as personal, but it feels personal, and feeling is what they're selling. Near the back, there's a page you didn't ask for, a recommendation to speak with their insurance arm about a policy that would round out the plan. It's the same building, a different desk, another product with a commission on it. The warm relationship has a sales quota sitting quietly behind it. But look at what actually moved. The warmth went up. The fee did not. You're paying $5,000 a year now for a plan that cost them the same to print as it did last year. Somewhere in the same city, there's a planner who'd build that binder for a flat fee and hand you the keys. Nobody in this office will ever say his name. At $500,000, the calls get warmer. The math behind them doesn't move an inch. Level 5. $1 million. $1 million puts you over a line the industry has a name for, high net worth. Crossing it changes what you're allowed to ask for. The letters arrive. Private client, senior advisor, a direct line to a man who picks up on the second ring. The hold music you sat through for years belongs to other people now. Then a competitor calls. They'll beat your rate, they say, and throw in a better savings tier. You mention it to your guy, almost by accident. He calls back within the hour with a counter. The firm that ignored you at $10,000 is now fighting a stranger to keep you. You ask, half as a joke, if the fee could come down. There's a pause. Of course, he says. Like it was always possible. It was always possible. You just never had the number that made him say yes. That night you open the account you started at $10,000 and look at what you actually own. The same index funds. The same boring names the machine picked in 4 seconds, years ago, for 0.25%. You've been paying 4 times as much to hold the exact same things. You didn't get smarter at $1 million. You got the leverage to stop overpaying for the same funds the machine bought you at $10,000. Level 6. $5 million. At $5 million, the products disappear. You get a team. A lead, a tax specialist, and a state attorney who picks up on the first ring. They stop talking about funds and start talking about how to move your money to your children without handing half of it to the government, how to draw an income that keeps you out of the top bracket. Real advice, the kind that changes numbers. A wire freezes on a Friday. You call. Someone answers before the second ring, and it's fixed inside the same conversation. The same problem would have cost you 3 transfers and an afternoon at $250,000. They start bringing you things. A private deal that never touched a public listing. A tax structure written for your situation, not pulled from a folder. You're not being offered products anymore. You're being consulted, and needing them is worth more to the firm than any single sale ever was. The perks arrive without being asked for. A dinner with 8 clients and a guest speaker. A ticket to something you couldn't have bought. A card that opens a lounge in an airport 3 time zones away. None of it is generosity. All of it is retention, priced into the relationship and cheaper than losing you. And the fee as a slice of what you have quietly collapses. 0.5%. A flat retainer. They fight to keep you now, so they charge you less to do it. The best advice in the building costs you the smallest cut you've ever paid. The advice gets honest at the exact level you could have figured it out alone. Level 7. $10 million. At $10 million, you don't have an advisor. You have an institution arranged around you. Nobody asks you to come in anymore. They drive to you. A man in a good suit sits across your own desk with a leather folder and printed reports. And at the end, he doesn't try to sell you anything. He just leaves a card. The selling already happened. You didn't feel it. People whose whole job is your money, your trusts, your grandchildren. Deals brought to you before they're public. A strategy written for your name and no one else's. Something breaks at 9 at night and it's fixed before you finish the sentence. You walk into a branch across the country you've never set foot in, and someone stands up and knows your name before you say it. The system flagged you across every location, not for fame, For position, your account is a named line in someone's performance review. 3 people keep their jobs partly because of you, and none of them know it, and neither do you, but the math is real. The chief investment officer asks what you think about emerging markets. You realize halfway through answering that they're not managing you anymore. They're consulting you, and the fee against $10 million is the smallest fraction anyone in this story has ever paid. The cleanest advice in the building goes to the one person who never needed to ask for it. The loop. Somewhere right now, someone just saved their first $10,000. 2 years of skipped dinners and an old car. They did the thing they were told to do. A polite voice told them they didn't have enough to be worth a person and sent them a link. The email lands the next morning. Dear valued investor. Not their name. They don't know yet that the system isn't ignoring them by accident. And in a room with no logo on the door, a team is moving someone's 10th million out of reach of a tax bill bigger than that first person's entire life, and charging almost nothing to do it. The system isn't broken. It's sorting. The advice gets better as your need for it gets smaller, and those two things run in opposite directions the whole way up. You are the same person at every balance. The firm just decides who you are based on what's next to your name.